Pleasure, thank you.
You've basically predicted that demand for mortgages in South Africa will hit a slump in the first half of 2014 due to higher inflation and sluggish economic growth. This, of course, will see consumers moving to other means to find lending. Is this having a dramatic effect on banks?
Absolutely. I think what you've seen since 2009 is that the banks have become very, very strict in their lending criteria, and often with good reason, given the bad debts and the change in regulation. But the real problem we've seen is that the consumer's disposable income has really fallen over the last year. You've just recently seen now an interest rate increase of 0.5%, and nobody's sure whether that will continue. But also the increase in petrol prices and electricity and property rates has had a dramatic effect on consumers' disposable income and the ability to prove serviceability when they approach a bank for a loan. So it's going to be an interesting next 6 months to see what happens in the residential property market.
Interesting but scary at the same time for the consumer out there. And one would think that the stricter measures and tougher lending criteria are designed for the consumer and to protect the consumer. But instead, it seems that the consumer is going to get into more problems moving elsewhere.
Well, I think one has to have a look at people looking to purchase homes for the first time. In the past, they used to be able to get 100% bonds. Pre-2009, just under 80% of people used to get 100% bonds, to purchase a home. Now, is that too much? Probably. We used to see also, some people used to get 108% loan to values, to pay for their costs. So I think that was a little bit higher, and credit was maybe extended a little bit too far. So now maybe norm has set in, and people have to come up with deposits, but it is going to be very, very difficult. So maybe the criteria that the banks are setting are good, but maybe they've also overstepped the market a little bit and made it very, very difficult, maybe too difficult for people to obtain debt.
Yeah. Well, let's talk about, I suppose, the downsides and the benefits of consumers moving to alternative lenders for this money.
Yeah, I mean, historically one used to, if you weren't borrowing money from a bank, you had the perception that you might have been borrowing money from a loan shark, and that is dangerous. The reality, a lot of these people used to lend money to clients who just were desperate for money that they would pay whatever rates. And that side of the industry is particularly unregulated. But what you have seen over the last, I would say, 3-4 years is certainly an emergence of non-bank lenders. And this follows, international standards because it's happening in the UK and in America. So you've seen an emergence of non-bank lenders who do have the credibility, do have the financial resources behind them to be able to offer something different to the banks, maybe resulting in quicker turnaround times. But I think the important thing for the viewers is that, should you be borrowing money from non-bank lenders, it is important to understand what you're getting yourself in for, and it should be on a relatively short-term basis because non-bank lenders are traditionally more expensive than the banks. Yeah.
Just finally, Gary, before you go, I mean, where does that leave the consumer? You want to buy your first home. You've only just got a job. You're trying your best to start a life out, and yet, you're sort of reaching dead ends. What do you do? What do you advise?
Well, I advise a few points. I think the starting point is the deposit. One needs to put money aside for a deposit, and certainly also plan ahead. You've just, as I mentioned earlier, you've seen increased interest rates now, increased property rates. So before you buy your first property, do a budget, work out exactly the costs associated with that property, and make sure that you can afford it. Also, another bit of advice is use originators as well. An interesting statistic came out recently that, if you go through an originator who will shop around to all the banks for you, their approval rates are far higher than if you just go to your bank. So we've seen that also over the last few years where people used to only deal with one bank, and now they're really shopping around to all the banks to see what the best deal is for them. So, I would also use originators. Put down proper deposits and plan ahead in terms of budgeting.
Gary, thank you for talking to us. Thank you for the advice. Gary Palmer, the CEO of Paragon Lending Solutions, talking to us here about borrowing and lending and banks becoming much stricter and people turning to alternative lenders for funding. All right, let's take a look at your market indicators now.